Is the perfect storm here? Ukraine and Russia, possibilities of World War III, inflation at 7.5%, the Fed raising rates up to 7 times this year, the unwinding of the balance sheet. Is this it? My name's Chris Naugle, and you are watching What Now, What's Next? So everybody's been enjoying really strong market gains. Your 401k's up, your brokerages are up, your cryptos have all been up. They've been doing great, but that's all since the pandemic. The pandemic lows up until April of 2021, the S&P 500 doubled and then it just kept going. The hockey stick. That's all great, but what does that actually mean to you, and is that sustainable? The answer is no. Here's the real problem. You see, the markets have been on a tear, and this is the fastest bull market period we've ever seen since World War II. And I'm not just saying World War II just to say it, but that's the fact. And now we're staring down the lens of what possibly could be World War III. The pandemic opened up Pandora's box of printing money, I guess. The economic machine all of a sudden had an opportunity to print a bunch of money. The Fed turned the printing press on, exchanged it to the US government in the form of bond purchases, and they put that money in your hands, the capital markets' hands, and boom, what do you have? The hockey stick in the markets, everything going up. But that also created other problems. Shortages. There wasn't enough people working, so therefore there's not enough goods to support what people want. People move. They're going from big cities out to the suburbs. Real estate prices are skyrocketing. Multiple offers, all cash. People are submitting contracts where they're not even filling in a dollar amount, and they're saying,
"Oh, you should just put your terms in. Let us know. We're a cash buyer. We'll pay whatever you want."
Come on. When does that happen? Well, it happens when the Fed prints over $5 trillion, puts it into the capital markets, gives the banks unlimited abilities to make loans to all of you, and puts a whole bunch of extra money in your pockets. Boom, you have a bull market. Actually, you know what you have? A bubble. You have a giant bubble that's about to burst. All we need to know is what is the pin that's gonna prick that bubble and blow that son of a bitch up? Well, we've got a whole bunch of things that we can point at. Let's point at inflation, 7.5% and climbing. Well, that's not good, right? You been to the gas pumps? You been to the grocery store? I bought 2 bags of groceries the other day, $86.
Did I do that?
Filling your car up, which used to cost $40 or $50, is now an $80 or $90 merry-go-round.
Did I do that?
All these things are inflation. But what is inflation? A lot of people think inflation is the cost of all those things going up. No, inflation is your dollars getting weaker. It is nothing more than a hidden tax. You see, the Fed and the government love inflation because as the cost of things go up, because the price of your dollar goes down, it gives the government the ability to pay back all that debt that they've been incurring, because obviously when they print money, what is it? It's debt. Wake up, folks. That debt needs to get paid back. So inflation, meaning lower value of your dollar, is a good thing for the government. They can pay all that debt back at 20 cents off, 30 cents off, 50 cents off? How many of you want a 50% discount on your debt? Sign me up. That's inflation. But what else just happened? Well, the Fed went on to give the minutes, and the minutes said that the Fed now has to curb inflation because we're running away. We're turning into 1980s. It's going to be hyperinflation all over again. So let's raise interest rates. Because when you keep interest rates low and you print $5 trillion, unprecedented, you create a bubble and you create this massive inflation. So to slow that bubble down, to slow this inflation down, what they do is they start raising rates. As they increase interest rates, things get more expensive. The cars get more expensive because your monthly payment goes up. Mortgages get more expensive. Everything that you enjoy, that you borrow money for, gets more expensive. Therefore, it slows everything down, hopefully gets a hold of inflation, but it won't. But we can believe that will happen. But the Fed is going to raise interest rates how many times? 3, 4, 5, 6? I heard 7 times in 2022. What's that going to do to the stock market? Well, I will tell you it will probably tank it, or at least start the first dip. But that's not all. Then the Fed said, well, hey, one other thing we're going to do is we're just going to taper the bond purchases. We're going to slow down that buying of bonds, and they've been buying mortgage-backed securities and treasuries. We're going to slow that down and eventually stop that. That's like turning off the spigot to the water that's going into the markets. That's not going to be good for Wall Street. Then they go on to say that they're going to unwind the balance sheet. In other words, all the bonds that the Fed bought, 9 trillion plus, they're going to start selling them in the open markets. In my prior video, I mentioned that that's going to be like a vacuum machine sucking all the money out of the capital markets. So what does all this mean for you? Well, this means that you should click the subscribe button, hit that little bell, and that way you'll know every single time we're telling you what to do. Because, hey, it's great to understand what's happening right now, but we need to know what's next and what do we do with our money. So what's next is it World War III? Well, because this Ukraine-Russia thing is a bit strange, and there's a lot of news out there with conflicting information. I'm not an expert in this, but if I were Russia, I would want to invade Ukraine because they have all the natural resources. They got all the stuff that you need for those electric cars, for those cell phones. They've got major natural resources. They also have a giant landmass. So if you're Russia and you have the military to take over a country like Ukraine and gain all those resources, well, why wouldn't you? Well, Putin says, seems like a good idea. Let's put all of our military on the edge and just poke the bear. Let's just keep poking the bear and piss him off and see who says something. And then our trusted president comes in and says, don't you do that. There's big warnings. Don't do that. And what are they going to do? Well, they're going to start pulling levers. NATO and the US are going to start pulling some of the levers just like they have all the way back in time. Let's look at what these levers are. So one of the things that you should check out is a website called economicprinciples.org. And there's a white paper in there that you really should check out. It's called A Deeper Look at Capital Wars. And it goes in to talk about what has happened in the past when wars happen. Well, the first thing they do is they start to pull some levers. They freeze assets. They seize assets. We've done this in the past. When we had the Iraq War, we seized assets for our enemies. We could try to do that. I don't know how Russia's going to react to that. They got some nukes. Number two, they block the capital market access. They block Russia from having access to the strongest U.S. reserve currency. You can't have our money. You can't buy our treasuries. You can't use our markets. Well, they might try to do that. And then what you're already seeing is embargoes and blockades. They stop the flow of things that Russia might need or anyone that challenges NATO or the U.S. You see, this isn't something I'm coming up with. This is something that's been done all the way back to, well, how far do we want to go? We can go back to the 1500s and we can see that every single time this has happened. Let's just look at a few. When it was 2014 right to present, Russia, the U.S. and Russia, what they did is they've targeted freezing assets, they've threatened it, but not only that, it has a moderate risk of blocking financial assets and a moderate risk of an embargo of key trade. And then we can go back into time, and I would focus, if I were you, on World War I and World War II, because during those periods, they didn't just block, they did all of them. Severe chance of asset freezing, severe chance of financial access blockage, and severe chance of embargoes of key trade. You see, that's where the US and NATO come in and threaten. But is Putin being moved by this? Well, time will tell. But you know what? I don't think it's smart to sit around and wait to see what happens, because the first dip in the markets will probably be much like what my drawing shows. What I tried to show, and don't hold me to this, it's not to scale, but from March 23rd of 2020, we hit a low in the markets. And since then, you can see it has gone up and up and up. Now, X marks the spot. I can't tell you when X is going to happen. You can't time the markets, you can't time the top, and you can't time the bottom. We'll cover that in a second. But if this is what's going to happen, the first dip, chances are it's going to be 50+%. Now, let me ask you, are you ready for a 50+% drop in your 401k, your assets? You want them to go down by 50%? I don't think so. So it's time to get ready, folks. It's time to prepare for the big storm, because the big storm's here, folks. Turn your TV on. Open up any social media site. You can see what's going on. It's problem after problem after problem after problem. At what point does the balloon pop? Well, I would say it's going to be really soon because you're already seeing weakness in the markets. You're seeing weakness in your crypto account, which is supposed to be the almighty.
Oh, don't worry, I got all my money in crypto.
How's that been working out for you lately? Oh, I'm sorry, not so well. But for the smart people, they've been buying when it's been going down using dollar cost averaging. So let's just talk about a few simple things you could do that will really help your chances of weathering this storm. First off, all those risky assets that you've been taking, because cash is trash, right? Got to take our money from cash and we got to put it in risky assets because we can't lose to this inflation bubble that we're facing. That is a lie. Now, long term, you don't want to keep money in cash. But short term, I would say cash is your bestest friend because cash allows you to buy into asset classes as they start to go down. And we're already starting to see them go down right over here. If this is our markets going down and this is your crypto account going down, what you should be doing is dollar cost averaging. Buy into the markets as they go down. Don't wait for them to go down and then start buying. That's silly. Too many people that try to time the markets get it wrong. According to Investopedia, day traders, or people that try to time the markets, get it wrong over 90% of the time. That's not a statistic you want to play with. That's a statistic like if you open a restaurant and you think you're going to be successful, your chance of failure is 90+%. But hey, why not? There's a 10% chance you're going to make it. I'm sorry, I don't play those odds. So if you know that there's a 90% chance of you losing money by trying to time the market, wouldn't you just get out of the markets? Sell the assets that are high, which is just about everything you own. Because Warren Buffett says it best, buy low, sell high, and don't lose money is the winning formula. He did not say attempt to sell low and buy high because it feels good. He never said that. He never said, let's wait for the market to tank and then buy at the lowest point. No, you can't get the low point. And he never ever said, sell at the absolute tippy top. He just said, sell high. So right now the markets are at high. They might not be the highest point because they're selling off a little, but I would still say most of you are making money. And if you are, it's time to exit. Get out of the risky assets. Put the money in cash. Put the money in U.S. Treasury bonds guaranteed by the U.S. government. Oh, you're worried about the U.S. government? You're worried about the U.S.? No. It's still the nicest house in a really shitty neighborhood. So go with that and then protect it. Put it into privatized banking policies. Oh, you don't know what those are? How about the infinite banking concept? Nope, never heard of that one? That's funny. Because for hundreds of years, this has been what the wealthiest families in this country have used. The Rockefellers, the Rothschilds, the J.P. Morgans, Walt Disney, Ray Kroc, Pampered Chef, and our sitting president today. Yeah, they all use privatized banking, and you don't know what it is? See, that's the problem. It's not what you think you know, it's what you think you know that just ain't so. That's the problem, folks. You know, the problem is not what you don't know. So go out there and learn what it is. You can watch my other videos right here on this YouTube channel by, again, clicking the subscribe button and click the alerts button. And anytime we talk about the infinite banking concept, learn, because that's where a bunch of money should be flowing. And then once it goes there, what you should start doing is watching the markets. When everything starts going down, set up a dollar cost averaging. You got money going into your retirement accounts. Great. Set up dollar cost averaging. Buy a little bit each week, each month. Set your parameters. I'm going to invest $1,000 a month. Great. Do it systematically as the markets go down. Some months you're going to get it high. Most months you're going to average that cost down. This strategy will beat all the day traders. This strategy is proven to beat day traders or people trying to time the markets. Just buy in slowly. And one thing I would certainly tell you, back to those silly, stupid U.S. Treasury bonds, what did Warren Buffett say? Buy low, sell high, and don't lose money. Well, what's going down? Treasury bonds, the price of them. Because as interest rates go up, the price of the bonds go down. Doesn't that sound like a good investment opportunity? Because then when this whole bubble pops and the market does tank, like this screen shows, bonds will then go up because they have an inverse relationship. So if interest rates are going down, the price of bonds are going up. But you see, I covered this in another YouTube video as well. Folks, the whole point of this, rambling on, is to tell you that the storm is here. It is time for you to get ready. It is time for you to start paying attention and stop burying your head in the sand. It's time for you to stand up, grab the torch, raise it high and say, folks, follow me. I'll show you through this. This is not going to be easy. Well, history proves it. No war was ever easy. And it just seems like, based on the things happening right now, we might be in war. I don't think a lot of countries or NATO wants Russia, a nuclear power, to have all of those resources. So they're not just going to stand back and be like, oh,
Putin, go ahead, man. Go ahead. We're not going to stop you.
no, they're going to say, we're going to stop you. We're going to seize your assets. We're going to do all those levers to prevent you from trying to do this. Well, that's what's next, folks. Get ready, because the storm's coming. It's time to prepare. It's time to get out of risky assets and sit in that cash is trash. No, cash is king, because cash allows you to buy back into the markets when they go down. You don't like cash? Great. Try privatized banking. Put your money into the infinite banking concept policies that we design and we can help you with. And then all of a sudden, we'll show you how to deploy that money into the markets while you're still earning uninterrupted compound interest. That sounds pretty sexy, doesn't it? Until next time, folks, this is What Now, What's Next. If you like that, make sure you subscribe to this YouTube channel, and right above, click that little bell so that it notifies you every time we go live, because we're going to be talking about this a lot. We're going to be talking to you about what is next and how you can prepare for it. Thanks for joining.